Welcome everybody, Joe with ECRM here, and I have with me today Danelle Cosmal and Kaylee Theriault from Nielsen's beverage alcohol practice, and we're going to talk about trends in the beverage alcohol category, as well as how COVID is kind of threw a wrench in the works with them. So guys, thank you for joining us. And before we get started with the presentation, could each of you, we'll start with Danelle, could each of you just introduce yourselves and your role within that practice?
Yeah. Hi, Danelle Cosmal. I've been with Nielsen for almost 16 years now, and about 9 of those years have been across beer, wine, and spirits. I'm with the beverage alcohol practice, and I'm the beverage alcohol lead. So pretty much anything related to beer, wine, and spirits where Nielsen is involved, I'm involved also. And I do a lot of these conversations and talking about what's happening within the industry.
Hi, Kaylee Theriault. I am in Michigan. I have been with Nielsen for about 5 years. I support Danelle in the BevAl practice area as a client manager, and kind of just supporting all the analytics needs and stuff on the back end.
Cool. So with that, we're going to dive right into the presentation, and as they present, I'll probably interject with some commentary and a couple of questions here and there.
Thanks, Joe. Joe, you know that every time Nielsen has presented at ECRM, you know, we give a pretty good overview of what's happening across beer, wine, and spirits. This year is, of course, an extremely unique year, and we can't talk about what's happening across beer, wine, and spirits without talking about the impact of COVID. And so that's really going to be the umbrella and overview of kind of as we're talking about trends in the industry, what COVID's impact has been. So what is that? First of all, we're talking about kind of different stages. When everything hit in COVID, the months of March and April, that's really when the massive pantry loading happened just in off-premise channels. Everything shut down almost from one day to the next in on-premise. And consumers were pantry loading, getting their toilet paper, getting their cleaning supplies, doing all of that kind of stuff. And then at the same time, purchasing their alcohol products. And those kind of first initial weeks and months of COVID, consumers were acting in a pretty different way than the way that we've seen starting in what we're calling the reopening phase. And that starts in June. And so when Kaylee and I start talking through the rest of the presentation, and we're going to be doing some comparisons of what that consumer reaction was within that initial time period of what we're calling the restricted phase, and when everything essentially was shut down, particularly in on-premise, which obviously had a big impact on off-premise, and then also doing some comparisons to this, what we're calling reopening phase. And I think what's important here is when we're talking about the reopening phase, I think of it really as what the next normal is. And because we've seen some pretty consistent behavior from June through most of the summer. And I actually think, you know, seasonality of summer aside, I actually think in the way that consumers are behaving right now is the way that we're going to see consumers to continue behaving in this next normal until we see some big changes like a vaccine or something like that.
Excellent. I remember talking to Scott McKenzie. I interviewed him a little while ago when he was talking about those phases, the rebound, reboot, you know. Yeah. So it's interesting to see. So now we're in that tail end of it, and so I'm curious to see how that unfolds.
Yeah, and I think you know, I think people tend to talk about like we're in the new normal, which we are kind of in a new normal, but we've been using more of the term the next normal because things have been changing so quickly and drastically, sometimes in really, really unexpected ways that it really could be the next normal.
And I think that what you just said is key, is the fact that there's so many unknowns. I mean, it can shift on a dime depending on what happens, you know, next. You know, people didn't expect this flood of, you know, the spikes that were happening in the Midwest and California. Now that's kind of going down, but we don't know what's going to happen again. We don't know if there is going to be a second wave, and if there is, how bad it's going to be. So there's so much that's still up in the air.
It's, I mean, everyone always wants to make predictions and everyone wants Nielsen to make predictions. And this obviously is the toughest year to make predictions because it isn't necessarily about how we think consumers will react, because we can maybe gauge that based on what we've seen over the past couple of months, but it's really understanding what's going to happen with the virus in different parts of the country and where it's going to hit,
Gotcha.
Which obviously we can't. Nielsen isn't predicting that. So we already introduced ourselves, but we're Danelle and Kaylee, and happy to share our thoughts and insights today. As we go through this is just a quick overview and reminder of what we're covering. So 2 areas of the business that Nielsen covers, off-premise and on-premise. I'll start with off-premise. Anytime you hear Nielsen refer to XAOC, or what is expanded all outlet coverage, that would include some of the traditional channels like food, drug, mass merch, dollar, Walmart, some club stores. Recently, we included Whole Foods within that scope, which we know is really important for suppliers like craft brewers and wine suppliers, and it also includes military exchanges. Within the scope of Nielsen, we also are tracking convenience channel and liquor channel. So anytime you hear us refer to Nielsen off-premise channels, that world or universe of Nielsen off-premise channels is the expanded all outlet of food, drug, mass, club, Whole Foods, etc., along with convenience store and liquor channel. And then we're also going to be touching on a couple of things that are pulling from data from wine.com. We have an e-commerce tracker that has been obviously really important in the past couple of months in understanding how consumers are purchasing online, and recently launched some direct-to-consumer wine reports, which also has been a big part of that e-commerce environment over the past couple of months. And then on the other side of that, Nielsen has a partnership with a company called CGA, and that's how we're tracking the on-premise trends, which has, that of course has presented an extreme amount of challenges and understanding what's happening in on-premise. And so that team has done a really good job of surveying consumers every single week to understand consumer sentiment, to understand willingness to go back to bars and restaurants and things like that. So I'll kind of start with where we were, because it's such a drastic shift. This, I think, might have even been a part of the ECRM Nielsen presentation last year. We used these pictures a lot in 2019 when we were talking about what was happening in the industry and where consumers were. And a big part of that conversation was consumers wanting experience. And we were talking about people having drinks on floating tiki bars and going to axe throwing bars, which at the time we thought that was like the weirdest, strangest thing to happen. And so
yeah, axes and alcohol. It doesn't sound like a safe mix there.
Right, I know. So that's where we were in 2019, and obviously, have moved into a pretty drastic scene. Another place where we were in 2019 and even into early 2020, when we were talking about the beverage alcohol landscape, there really were 3 main pillars or consumer trends that were driving what was happening within the alcohol space. And that first pillar was around health and wellness. And so consumers in general, not just related to alcohol, but consumers in general seeking a healthier lifestyle. Consumers wanting to have more mindful drinking occasions. And because of that, that was fueling some of the innovation that we saw around low alcohol and non-alcoholic products being introduced in the past couple of years. The second pillar in terms of consumer trends that were influencing what was happening within the alcohol industry was around experience. So the last slide that we just saw is a great example of that, of anything new and different and fun and exciting as part of that experience. Consumers really seeking authenticity in a story in whatever product they're drinking, wanting experience through different types of flavors, and then also wanting experience through blurring of category lines. So, 10 and 15 years ago, we talked about everything in the industry as a beer drinker, a wine drinker, and a spirits drinker. And of course, that no longer exists. And consumers, when we think about something like a ready-to-drink product, a ready-to-drink cocktail, in a lot of cases, consumers don't even know if it's a wine-based cocktail or a beer-based cocktail or a spirits-based cocktail. In some cases in the industry, it's difficult for us to explain those differences. And so it's really more about the drinking occasion and the experience that's related to that product, and not necessarily the base of if it's beer, wine, or spirits. And then finally, that third pillar is around convenience. And it's convenience not only in the way that consumers were getting products and things like e-commerce and you know, ordering something on Drizzly and getting that within the next hour, but also in the product convenience related to the product itself. So that's when we saw so much around the growth of cans and portability of products, and even things like smaller sizes, so that, again, there's the portability around it. So what's interesting here is, you know, in 2019 and the beginning of 2020, these three kind of topics and consumer trends, like I said, were driving a lot of what was happening within the alcohol industry. And what we've seen is there still has, a lot of these have transcended into what we're seeing within COVID in some way. So they've morphed maybe in a slightly different way, but we think in this next normal, we'll start to see this coming out more and more. And in this kind of new universe that we all live in, how do we find new experiences and interesting experiences in that way? And I think consumers are being really creative and thinking about it. And then that forces suppliers and the industry and retailers in the industry to also be flexible and create those, you know, interesting experiences. So what did the industry look like in terms of trends before COVID? So these are the pre-COVID trends. This is 52-week time period. And this, again, is this is off-premise only. So in off-premise channels, the beer, flavor malt beverage, seltzer, cider category was up nearly 4% in dollar volume. Spirits had been leading for, you know, the past couple of years and was up about 5.5%. And then wine was up about 1%. I will mention that seltzers really was driving most of the growth for the beer category. So if we were to remove flavored malt beverages and seltzers from that, then the category was about flat. So that's where we were. And this is where we were in terms of on-premise. On-premise was looking really good too. All three categories up in dollars, beer and spirits both up in dollars, and then volume, wine was essentially flat in terms of volume, specifically for the more recent time period. So this was looking at immediately before COVID. So it was, you know, when we say latest 52 weeks, it was 52 weeks ending February 26th. And so those more recent time periods in the early phases of 2020, which would be represented by the year-to-date number, and the latest 4 weeks, particularly when we're looking for wine and the flat volume sales, that was really happening more in like the early weeks and months of 2020. So that's where we were for on-premise at the time. And then March came, and the alcohol industry in the US obviously just turned upside down. When on-premise closed, like we talked about, almost immediately, so much of that volume shifted to off-premise. So when we're talking about how we're operating in uncharted territory, we're operating in uncharted territory because of that massive shift in volume from on-premise to off-premise. And I think so many people get excited and want to talk about, you know, the surge in the alcohol sales that are happening, and the alcohol industry is, you know, on fire since COVID, and it's really just been that shift from on-premise to off-premise. And that shift in dollars accounts for now, just when we're talking about COVID time periods, that's, we're always referring to that first week of March through whatever latest time period we have available, which for us right now is the beginning, the 1st of August. So within that time period, the industry in Nielsen off-premise channels now has over $40 billion in sales, and that's up nearly $9 billion from what we would have seen in that same time period last year. So $9 billion in sales in off-premise, greater than what we saw last year. But the next question obviously is that enough to make up for that massive, massive loss that was happening in on-premise?
And you know what's interesting is during that time period, you know, later on, once the restaurants started opening and got, you know, permission to do cocktail delivery and things like that. They were almost starting to try and act like on-premise in promoting their delivery. You know, making special cocktails, going to easier things to deliver like cans and stuff like that. And there are even some places here by me in Queens, New York, that they would actually change their seamless menus into like a marketplace. And, you know, I actually did an interview with Bar Business Magazine, and they were saying that some on-premise locations even changed the name on Seamless, calling themselves a liquor store. Or, you know, so that when people searched, they would look and they would find them and they would get cocktail delivery and things like that. So it's just interesting seeing how some of the on-premise operations tried to adapt to that off-premise customer, even though they traditionally weren't an off-premise, you know, retailer. So
yeah, I think that just goes back to that how quickly the entire industry was able to move and just shift and be flexible and really, really creative in a massive way. So not only when we're talking about off-premise retailers, we're really focusing on e-commerce. I mean, they were dealing with so many additional restrictions and I mean, so much more in terms of safety and security for both their workers and people who were visiting the customers who were visiting the stores. And then distributors that were shifting, you know, their entire sales force from on-premise to off-premise, and people that had never worked in the off-premise space before. And then, like you mentioned, in the on-premise, it was the same thing in my neighborhood. Just a ton of restaurants that still are doing, you know, produce boxes and I mean, everybody around here is still doing the cocktails to go, but you could buy masks and toilet paper along with your dinner that night. And so, I mean, everyone was just none of us have faced anything like this, and you know, at least in our lifetime in this country. And so everyone was just moving at a really fast pace to be as flexible and creative as possible, I think.
Yeah, we had a restaurant selling toilet paper too, back when it was just the front they had. And during that time, you know, late March, early April, I mean, you had to get it wherever you could get it. So
yeah, I actually think it was the first time I saw that, I was like, well, that's brilliant.
Yeah. Kaylee, are you seeing the same thing in Michigan?
Yeah, definitely not as like to go around where I'm at with restaurants and stuff. But I did see some stuff online where restaurants were promoting if you buy, you know, a certain purchase from us or alcohol, we'll include a roll of toilet paper along with that. So a lot of creative ways to market the the to-go.
So it kind of just blurred. Everything started blurring. Everyone's trying to be a retailer, you know, on-premise retailer. It was interesting to see the innovation and the different ways that they would try to do that. And some of these things are probably difficult for you guys to measure. Like, for example, one restaurant in New Jersey, they would do cocktail lessons / Zoom, you know, meetups. You know, it would be like a Zoom hangout, but you would pay in advance $10 to get in, and they would have bartenders, you know, their bartender, and sometimes they'd have a guest bartender from different locations. They'd give like 4 cocktail lessons during that time, and in between it was just, you know, and they would get 100 people every week, and that money would go right to the bartenders who were out of work, you know, who weren't working. And but it was cool because they would actually pre-sell some of the ingredients and ship it to the people beforehand. So lots of creative ways that they're doing it, and it's just, you know, it's so different from one restaurant to another.
Yeah. I think the wine industry is doing something similar, and so the wine across suppliers and retailers, the wine industry is doing virtual tastings. So ship some small tastings to people, and then they have a virtual tasting. And so, you know, when people are restricted in what they can do socially, if you can do a virtual tasting, that's you know, that works.
But does that count as e-commerce? You know what I mean? Like how do you measure that? Does that count as e-commerce, or does it, you know?
Yeah, I mean, that isn't something that we would be tracking in our, Kaylee's going to walk through some of the details of e-commerce, particularly with off-premise. And so that isn't something that we would be tracking. In some part, that is something that our on-premise team would be tracking if it just goes through the restaurant's regular sales. But again, it just goes back to people have just been moving so quickly. And so, I'm sure there are a lot of examples like that just aren't being captured by anyone right now.
Yeah, no, nobody. How could you? Yeah.
Yeah. As we've been kind of tracking what's been happening in off-premise sales for alcohol, we've been benchmarking, I guess, against consumer goods, just as to have some type of benchmark. So I think this is an example, pre-COVID time period, of course, is highlighted on the left-hand side of the screen. Where we are in COVID year to date is in the right-hand side of the screen. I think I mentioned before, anytime we're referring to COVID year to date, that's the first week of March, that's where we saw the first initial spike in sales in terms of pantry loading, then through the latest time period, which is through the 1st of August. And so this is a week-by-week look of both alcohol sales, and that's represented by the blue line, and total consumer goods or fast-moving consumer goods, which is represented by the black line here. So the third week of March is where we saw that massive spike in pantry loading, and that's where you see growth rates of like 60% for consumer goods, which obviously at that point was outpacing alcohol sales. I think everybody was just, prioritizing maybe toilet paper and cleaning products over alcohol at the time. But then that immediate next week is when we start to see the off-premise alcohol sales outpacing growth rates of total consumer goods. And we've seen that consistently week by week. And so in part, we would expect that because half of the industry shut down with the on-premise shutting down. So we would expect that off-premise alcohol sales should be, really strong because so much of the on-premise shut down. But at the same time, I think it also just speaks to alcohol is a product that kind of can withstand and weather a lot of different changes and challenges within pretty much alcohol accompanies a lot of changes.
And the increased stress that everybody's facing. I mean, they're going to drink a little bit more.
That's actually interesting because I think everybody's been, I think there definitely is a perception that people are drinking more right now. And any consumer surveys that we've done, both with our on-premise team and our off-premise team, we've seen pretty consistently that people are saying that they're drinking about the same amount of alcohol. It's just that shift. And so there's definitely a perception that people are drinking more, but for the most part, people are drinking about the same amount of alcohol.
I think it evens out because I'm drinking less. So I actually drink less than I did during beforehand, but I'm sure some other people are drinking more.
Yeah. So the last slide I showed total alcohol, and that breaks out a little differently once we start looking across beer, wine, and spirits. And so the purple line represents spirits, the red line represents wine, the yellow or gold line represents beer, flavored malt beverage, and cider category. And so you can clearly see that spirits has been leading growth here, followed by wine, and then finally by beer, flavored malt beverage, and cider. And again, part of that goes back to the spirit growth. Part of that goes back to that on-premise to off-premise shift because of spirit's strength within on-premise, and it had a greater share in on-premise. And so that volume's going somewhere. People still want to drink, tequila and cognac, and so they're not getting it for the most part on-premise, so they're purchasing it in off-premise channels. So I mentioned before, we've seen this surge and the spike in sales in off-premise, and really the big question is it enough to make up for the on-premise losses? And we looked at it in a couple different ways, but for the most part, some really high-level talking points around that is, if you look, we did some pretty rough estimates when COVID started of what that universe in off-premise would have to look like in order to make up for those losses in on-premise. And so if we look at volume and what the volume in off-premise would have to be, consistently it would have to be, growth rates of 22% or higher within the off-premise on the volume side of things. When we're talking about dollars, it's a very different story because of the markup and what people are paying in on-premise. So if I buy a glass of wine at a restaurant, that might be the same price as the bottle of wine if I'm purchasing it off-premise. And so the dollar break is much more skewed to the on-premise side. So in order to make up for total dollar loss, off-premise would need to have growth rates of 73%, which we're of course nowhere near. So we'll talk a little bit about what that looks like across beer, wine, and spirits, especially for volume growth. So on the right-hand side, the volume growth, this represents volume growth for COVID year to date across beer, wine, and spirits. So that 22% threshold that I said of growth rate, spirits has been maintaining that. So more or less at a really high level, we would say that spirits may be making up for that loss for on-premise. That of course differs across each of the different spirit categories too. Wine has recently just, for a little while, they were also maintaining that 22% threshold, but they've since dropped. And then beer has been lagging a bit in that. And then when we talk about dollars on the left-hand side of the screen, that of course is a very different story. So that we know the industry overall will be losing dollars. Our hope is that off-premise can, still maintain some strength to make up for some of those losses. Another interesting thing that we looked at throughout week by week in COVID weeks, wanted to understand what was happening on shelf. So were there some categories that were losing SKUs, that were selling more UPCs, and others that were selling more? And so it's a pretty clear trend and difference in what was happening with wine and spirits and what was happening with beer. So again, wine represented in red here, spirits represented in purple, and then beer represented in the yellow and gold line. Craft beer is represented in that dotted line. There has been a trend. So even before COVID time period, there was a trend within beer that was really driven by craft beer of a reduction in SKUs for that category. So a reduction in the items that were being sold within that category. And that just goes back to the sheer number of thousands and thousands of craft beer SKUs that were being sold in off-premise, and the velocity, like those products just weren't keeping up with the velocity, and so they were losing some shelf space. That trend was happening before COVID. However, you can see with that blue dotted line, that's where we start to see a little bit of even more of a dip, especially in kind of those months of April of craft beer in particular, but beer and craft beer kind of losing and not selling as many items and having as many items on shelf, whereas wine and spirits had an uptick in that. So really I wanted to share this just because I think this is important. I think a lot of your attendees are going to be thinking about how they're getting shelf space. This is a really tough time to do that. And as retailers are thinking about fall resets and everything else, I think there's going to be a lot of pressure on the craft beer industry in particular to really have some tools in their back pocket to illustrate their strength and illustrate the importance and the reason for them to be on shelf, especially when they're facing things like ready-to-drink cocktails and hard seltzers that are just moving in and taking up a lot of shelf space now.
Mm-hmm. And do you also think that also the larger pack sizes are kind of encroaching into some of that space too? I know consumers are trying to buy bigger cases and things like that.
Yeah, we actually haven't seen necessarily a change in that in terms of at least the segments that typically, have the larger pack sizes. If anything, there were some out of stock issues just because, but to your point, people definitely were moving to larger pack sizes. Yeah. So some high level things. We're going to get into kind of details of what was happening across beer, wine, and spirits within each of the categories. But before I do that, I just wanted to share kind of some high level thoughts of the world. I talked about the world as we knew it before COVID and the world as we know it now in the US. And so safety and health and hygiene, whether we're talking about walking into a brick and mortar store or walking into a restaurant. Health and consumers tell us that health and safety is their number one consideration and concern, which is obvious. We talked about that massive shift from on-premise to off-premise, and that kind of homebody mentality or homebody economy, I think, is going to continue throughout this next normal. And so that's going to increase the importance of things like e-commerce, and like we talked about, also the delivery and takeout options that hopefully will continue in states, and they'll continue to be legal, and that will continue to be an option for consumers. The third aspect here is that consumers react differently. We all know consumers, we all react in very different ways, but consumers are really sitting in a place where they're experiencing all of this in two very drastic ways. And the way that Nielsen has tracked this and talked about it is either the constrained consumer, and so that represents more the consumer where they are facing extreme economic hardships. There has probably been job loss. And the way that they're going to be purchasing is we're going to start to see a pretty big shift, especially once some of the government support begins to lessen from what we've seen in the past couple of months. The insulated spenders, on the other hand, are those people that their economic situation hasn't changed. It actually might be improving because they're not taking big vacations right now. They're not, they're not going out to eat all the time. They might be going out to eat every now and then, but their spending power really hasn't changed. And in fact, it might actually have even expanded. And then we're seeing some pretty big differences in terms of younger versus older consumers and how they're reacting to things and their purchase behaviors. And then, of course, where people live, that's been a pretty big driver as well. I'll talk through. Go ahead.
Oh, I was going to say the constrained versus insulated spenders, and that's something that Scott and Mackenzie and I talked about during our interview, and I see that a lot. I experienced it myself, too, for that reason. I'm not going out to eat regularly anymore, maybe once a week instead of 2, 3, 4 times a week. But what I'm buying for myself is more expensive. Now I'm buying like organic meat and, grass-fed steaks and things like that. So I'm spending more money, but still less money than I would if I was eating out. So it just gives me the flexibility to buy better quality food or beverages or whatever.
Right. I just, I did my regular wine order. And so, and same, when we were making the selections, we got a couple bottles that were a little bit more than we would typically do because we're not spending that in restaurants right now. So premiumization and trading up, and that actually is an example of what I just talked about, that, that shift and what we would have been spending at a higher price in on-premise and buying maybe a more expensive bottle of wine in off-premise. And then also seeing a shift, it differs a little bit by channel. So if you think about something like direct-to-consumer wine, that we actually haven't seen as much premiumization within that channel, which I think is interesting. And then overall consumption, we talked about too, that I think there's been, a big perception that there really has been a big increase in what people are consuming. And from what we've seen so far, and even what we know of history over the past 20 years, consistently year by year, recessions, no recessions, alcohol consumption maintains, it's pretty stable. It doesn't shift a lot, and we don't think that that's happening right now. It just goes back to it's a shift of where it's coming from. Okay, so I'll go into some details into some of the categories. So we'll start with spirits, and I'm starting with spirits because, as I've mentioned, spirits really has been they've been leading the growth, and a big part of that, again, is that shift from on-premise to off-premise. But the specific categories that are leading some of that growth: ready to drink, tequila, cognac, whiskey. So tequila has just been on fire, and I did a bit of a deep dive on that just in the past week, and I think there are a couple reasons for tequila's growth. in that first it was growing like crazy, both in on-premise and off-premise before COVID hit. So that's an example of one of those trends that were, it was a trend that was really popular. It was before happening in pre-COVID time periods. And that's just translated into the recent months as well. And again, it's tequila historically has had a stronger presence in on-premise. So that also represents that shift. Cordials and cognac are somewhat similar. And then cordials has been interesting because, you can see, well, first I'll talk through this chart. The gray bar there represents that pre-COVID time period. The lighter purple bar represents that restricted living time period. So essentially March, April, and May. And then the darker purple bar represents June up until the first week of August. And so I think it's interesting, especially cordials in that beginning, that restricted living time period from where they were in pre-COVID time period. Cordials had a big spike, and that kind of represents that that insulated consumer that we talked about, where they might have more time, they might have the spending power for it, they might just want to have some fun cocktails at home, and so I think there's a lot of that happening at home. And the quarantini has been a pretty big buzzword.
Well, to that point, it would be interesting to see, maybe there's a way that you could dig into your data and find out, but correlating the sales of these, drinks, the spirits drinks with the other ingredients that would go into these different cocktails and the tools, and seeing how much they've all grown together.
Yeah, so we did that a little bit, but that's funny because I've been thinking I want to do a visual for that because I think it'll be really cool to see. But we did that especially in the first month or two, and looking, because we saw gin that, as you can see from the gray line there, it was still growing, but not really a huge rates in pre-COVID time periods, but we saw people were kind of surprised to see that initial spike of gin. And I looked at non-alcoholic beverages, and during those weeks, tonic water was the #1 non-alcoholic beverage in terms of growth rates. And then after that, it was lemon and lime juice. So
of course, yeah.
Yeah. So the correlation that you mentioned there, it was definitely there. And then ready-to-drink cocktails, that's another one. That ready-to-drink cocktails, it's still really small. So everything in the bottom, the black boxes on the bottom, that represents that segment's or that category's share of total spirits. And so as you can see, ready-to-drinks, it's still pretty small, but growth rates have just been on fire, and that hasn't slowed down at all throughout COVID. And that also just might be, it's an easy, interesting way for people to have one of their favorite cocktails at home and instead of going to a restaurant.
Yeah, and as far as on-premise goes, at least over here, I've been seeing a lot more ready-to-drink cocktails because I think it's less touching of stuff. It's simpler. It's, you know what I mean? Like, I think it may be, in the consumer's mind, a little safer because you don't have all these hands involved in preparing something. It's just, here you go.
Yeah. That's actually something that our on-premise team has been talking about, and they continue to talk to consumers about, because obviously when they ask consumers about their willingness and interest to go to a restaurant, safety and comfort are the two key factors. And they're also hearing consumers say that something like getting a drink in a can. And so when suppliers are thinking about if they're launching things in draft seltzer, which is a really hard thing to do, like, why do that right now? Because consumers, the primary interest is to have it in a can just because of safety concerns. That's a whole other conversation though, because of the can shortage, but we'll see. In terms of, to your point though, consumers, it is something that I think, especially for on-premise retailers, to be thinking about. That's the space where consumers are right now, of whatever can make them feel safe and comfortable the most. So within spirits, I mean, in pre-COVID time periods, when we talk about price tiers and premiumization within spirits, the higher price tiers really were driving growth in pre-COVID time period, and that hasn't changed at all. And in fact, it's kind of it's accelerated during COVID time periods, both within the restricted living and the reopening time periods. So I think that again goes back to that consumer. They're two different types of consumers, and that insulated consumer that's probably driving a lot of that growth within the ultra price tiers. And then finally, it was really interesting for us to track sizes across beer, wine, and spirits. I think it's not a surprise that the larger sizes had a really big boost in sales, especially during those first weeks and even month or two of COVID. So, you know, when we talk, you can see the 1.7 liter had a huge spike in sales, especially during that restricted living time period. What we have noticed is once the reopening period started, you see that growth decelerating a little bit and see a shift more towards those smaller sizes, especially something like the 50 milliliter and the 100 milliliter. I think that's interesting because when we look across sizes, the 50 milliliter was something, that's the little airplane bottle size product. And so it's interesting because when we think about pre-COVID time periods, that was really hot, and it was just a good way for consumers to have a little taste of something or experiment maybe. And that's where we're starting to see kind of those pre-COVID norms coming into this reopening phase. So next I'll do a little deep dive on wine. Similar to what we saw with spirits, the high end of wine is driving a lot of the growth. And, you know, particularly during this reopening phase, we're seeing even stronger growth rates with that 20 to 25 plus range. And again, that goes back to, in part, some of that is a shift of what somebody would have been spending at a restaurant and now what they can spend in off-premise with maybe a little bit more expensive bottle of wine. Another thing just to call out here that's interesting is those lower price tiers of anything lower than $11. And this is priced based on glass bottle of wine, the 750 milliliter, but anything with that $11 and below in pre-COVID time period was actually in decline, and it had been for, you know, a couple of years now. And so obviously saw a big bump in sales. So it just goes back to, we saw everything growing across beer, wine, and spirits. Like everything was growing at really incredible growth rates. And in part, that's why we've also been talking about, you know, is it surpassing the growth rate of that category norm, or is it losing or gaining share, just to help to give a little perspective of if everything's growing, what's growing more. Mm-hmm. And then container type and size has also been interesting to track in wine. So the big spike that you see of 3 liter box, that was on fire, especially within the restricted living time, period. So that that's decelerated a little bit. But, you know, even in things like the 5 liter box wine, where we had seen again some declines for the past couple of years, they also saw a spike in sales within those first couple of weeks and months. And it just goes back to, I think as we were all shopping within those first weeks, no one really knew what was happening. We didn't know how much things were going to be shut down and how long things were going to be shut down. And so when we were in the store doing, you know, if we were able to get a spot for that, you know, Instacart delivery or whatever, then I think people just got whatever they could. So they could. That's
pantry filling for you.
That's it.
3.3 liter box.
Yeah, it definitely is. It definitely is. So things like alternative packaging, in particular cans and Tetra Pak. I mean, Tetra Pak really just, there wasn't a relevant spot for them during COVID, and I haven't really seen that happen even in recent weeks. Cans has been, it's an interesting conversation because I think canned wine recently has gotten a lot of attention for how big it's gotten in the past couple of years, the growth rates that are happening, which it's really phenomenal growth rates. At the same time, canned wines actually had stronger growth rates in pre-COVID time period. And so I think it goes back to during that restricted living phase, Cans maybe just, again, didn't have a role in the same way that the 3-liter box did. Mm-hmm. I actually thought we would see a bigger bump in sales for canned wine once summer months hit, because people maybe were going to the park, or maybe were having, spending a little bit more time on patios. And I actually thought we would see a bigger bump. We haven't seen that right now. That said, still really strong growth rates. And so I'll actually speak to canned wine in a second.
Well, it looks like also they're doing so much with the ready-to-drink spirits, and the cocktails, that they're leaning towards that. That seems to be so popular now.
Yeah. And so, the wine cocktails are equally popular, right? So, and I think it goes back to consumers might not necessarily even know or be paying attention or care of what that alcohol base is. And so the cocktails and ready to drink, whether it's spirit, wine, malt based, cocktails are hot right now, no matter what. I put this slide together just to talk about canned wine and canned wine cocktails, because sometimes that's blurred and the conversations are blurred, because I think there are some assumptions that consumers might be using and drinking canned table wine in the same type of drinking occasion that they would drink a wine spritzer or a wine seltzer. So I wanted to break that out a little bit. And so the chart on the left is the dollar growth rates for canned wine and then the wine-based cocktails. And what I just talked about in that last slide, canned wine is still growing at really incredible rates, just slowing a little bit from what we've seen in pre-COVID time periods. Whereas the wine-based cocktails had a huge surge in sales within the restricted living time period, and still really, really strong growth rates within the reopening. A lot of that, I think, is driven by some of the newer wine-based seltzers, the wine spritzers, some of the products like the Babe wine that has, that's owned by a very large supplier, and they were able to get massive distribution. So I think that's happening in a couple different areas as well. I do think that it's interesting, and it's important for us to track share of the total category for both canned wine and wine-based cocktails. I mentioned that canned wine growth rates have dropped a little bit, but that said, they're still gaining share. So their growth rates are still growing at a faster pace than most of the rest of the wine category. And then the wine-based cocktails, while still pretty small, are gaining share. And I think we're going to continue to really see that grow at a fast pace. Mm-hmm. And now finally, beer. So I'll start with kind of some trends that we've seen across the beer industry and highlight trends that are a little bit different for COVID time periods from what we would see, in any other time outside of COVID time periods. And the first is around large sizes, and that we saw in spirits and wine with the large sizes. Obviously saw that a lot within beer, things like 24 packs, 30 packs, 36 packs. The 30 and 36 packs have been declining for a while, and they're still growing strong double-digit growth rates. The one difference between beer and what we saw in wine and spirits is the growth rates for the large pack sizes in beer haven't slowed down as much. So I think people are still gravitating towards some of those large sizes. Premiumization, which we saw in both wine and spirits also. Premiumization within beer was really accelerated during COVID, and there's been a shift to the above premium segments, a share of about 5.5% moving from those lower price tiers to the more expensive price tiers within beer. And I actually think that probably will continue, maybe not as fast as a pace, but it's hard seltzer that's driving most of that. Yeah. And then big brands is another one that is, it's been a little bit unique to beer, where we've seen big brands week on week. The top 20 brands have been growing throughout COVID, and in pre-COVID time periods, nearly half of those brands were declining. So that's been a pretty big shift. I think there's been talk that in part it could be, people have been talking a lot about trusted brands. So in part, people were initially gravitating towards those big, iconic, trusted brands. And at the same time, people might just have been purchasing the brand that was on shelf because we were just taking and purchasing whatever we knew and whatever was on shelf also. And then finally, some of those trends that were really popular in pre-COVID time periods, a lot of them have continued to translate in throughout COVID weeks. Hard seltzers, which I'll get to, ready to drink cocktails, and the non-alc and the low-alc products too. So across beer segments, this is a similar story that all beer segments are up, which is really different than what we had seen in previous years. Some of those big iconic brands that fall within that premium light segment and below premium had been in decline for a number of years now. And so with COVID and off-premise, there was a big surge in growth with them. Again, because all segments are up, we've been tracking who's losing share. And that's kind of an interesting story. So all of those segments kind of fall on the right-hand side of the chart. And premium, light, and below premium really have been losing the most share during COVID. Those are the big brands like Bud Light, Miller Lite, Coors Light, et cetera. And what's interesting is they're still all growing. This is the first time in years that we've seen those three big brands week over week in at least the top 20, if not the top 10 growth brands for the category. And that's been a really long time since we've seen that. They're just not growing as fast enough or as fast of a pace of some of the other brands and segments. So they continue to lose share. Craft is losing share a little bit. We also track, this is kind of a broad definition of craft. We also track independent craft, or what the Brewers Association would define as, independent craft, and growth rates have been pretty similar across, especially during the reopening phase. Another interesting call out there is around Mexican imports. So we saw a surge in off-premise sales during the restricted living time period with Mexican imports, and then you'll see a pretty big drop off there for reopening. And a lot of that is related to out of stocks. Mexican imports have experienced a lot of out of stock issues. A couple of kind of beyond beer segments that I think are interesting to call out. Non-alcoholic beer has really, in pre-COVID time periods, they were in double-digit growth rates, and that has maintained popularity and growth. And I think that just goes back to consumers in some way really are still trying to find a balance and healthier lifestyles and mindful drinking occasions. And then some things like hard tea they've had a huge bounce back in recent months. So one big missing segment that is on that isn't on this chart is seltzers, and it's just because growth rates are so big that it messes with our chart. So I keep it on different slides. So a couple of minutes on hard seltzers. Just in COVID time period, seltzers have had nearly $2 billion in off-premise sales. And just as some comparison, in 2019, seltzers as a whole throughout the entire year had close to $1.6 billion in sales throughout the entire year for off-premise. So just in the past 5 months, they've surpassed that. Their share has doubled in the category. So it's incredible how so many new brands launched in 2020, and everyone is doing well.
Wow.
This is an interesting look of kind of the growth trajectory of seltzers from the past couple of years. Each line represents week by week sales for each year. So the blue line is the most current year. And as you can see, growth dollars have doubled and tripled and, from this year versus last year. That gray dotted line represents when COVID started and when initial pantry loading started in the US. And so that you can clearly see that hard seltzers have just, skyrocketed since then. They've now surpassed $3 billion in sales annually in off-premise channels. And in that case, I'm only talking about kind of the traditional initial hard seltzers that some are malt-based, some people just call them malt-based, but the White Claws, the Trulies, the now Bud Light seltzers, all of those, the presses. And then if we also add in the wine and spirit-based hard seltzers, that's an additional almost $200 million. I will say, just from what we've seen in the past couple of months, hard seltzers and off-premise channels have had over $100 million in sales week by week, which is really, really impressive.
Wow.
And then one more kind of interesting aspect of hard seltzers during COVID is we wanted to understand the hard seltzer buyer during COVID time period. I think I initially went into it with some assumptions that for the most part, they would be people that had purchased hard seltzer prior to COVID, drank it a lot in summer 2019 when it was like the summer of seltzers, and that it was kind of that loyal seltzer base that was driving a lot of the volume. And what was interesting is when we looked at that universe of hard seltzer buyers during the months of March and April, nearly half of those buyers, it was 44% of those buyers, were new entirely to the hard seltzer segment. So I think that's something that's really interesting for all of us to understand, is that consumers are still in a mindset where we're willing to try new products. Like, there might be lockdowns everywhere, but at the same time, we're still seeking something new. And so there are, for anybody that's launching new products or thinking of taking new products on, there's still a lot of great opportunity there, and consumers are still willing to try something new.
I think that's really important for the brands to know, is that, you know, there still is opportunity. Well, for the brands and the retailers to know is, there still is an opportunity, and it's important to keep looking for those new brands and new products, and, you know, discovering those innovations.
Definitely. So now I'll turn it over to Kaylee, and she's going to walk through how e-commerce has skyrocketed.
Awesome. Thanks, Danelle. So Danelle spoke to the significant shifts that we saw from the on-premise closures shifting into that off-premise space. And we're also seeing huge shifts go to that online and e-commerce space. We're seeing very high triple-digit growth rates for Bevel, which is outpacing any other CPG department. Keep in mind it is on a smaller base, but we have continued to see those triple-digit growth rates throughout this COVID time period. We see that same initial spike during the restricted living phase, and that kind of tapers off once we get to the reopening, but still maintaining that growth. During that initial restricted living phase, shoppers kind of moved into that stress-free environment, non-communal route of shopping. The online space really gave them the ability to take their time and browse a little bit more than what they would have been able to in the store. And then as we work through that reopening phase, people are still kind of taking their time and utilizing that stress-free environment.
Quick question about the measurement. When you measure online, is that from, you know, you have the pure play e-com sites, but then you have the retailers that might do click and collect, or from that, you know, what are you measuring? Is it all of it, or?
Yep, exactly. So through our e-commerce solution, which is we partner with Rakuten on that, we measure both those pure play retailers like the Drizzlies of the world, and then we also do measure those click and collect retailers as well.
Gotcha.
So not only do we see higher growth rates than we do in store, but we're also looking at some of the drivers behind that, and we have seen that there's a substantially higher basket size when people are shopping online, about 3 times higher than what we see with those in-store purchases. When we dive into what categories might be driving that, we see really high growth rates coming from spirits, though wine's still maintaining about 70% of online sales, and then beer trails behind a little bit more there. But that spirits category is really taken off and is one of the fastest growing online. When we dive into the buyer base of who might be purchasing online, historically we've seen spikes around those holiday time periods. People shift to that online purchasing a little bit more. But since the start of COVID, we've really seen a surge in new online buyers. So these are people that have typically bought in store, and now they're turning to that online space, likely because of the stress-free shopping, not having to worry about being around others when they're looking. So we've definitely seen that shift in buyers online. And when we look at the ages of those buyers, we see ages 35 to 44 really driving a lot of that growth. So
are you seeing this continuing? Like, we've seen over the past few months, a lot of consumers switched to online for their typical staples that they would normally get in the store, your center store items, things like that. And a lot of them are going to keep doing, buying some of those items online just because they've gotten used to it. They did it because they had to in the beginning, and they kind of like the convenience and all that. They like to be able to browse and all that. Do you think the same thing is going to happen with this? That spike will kind of stay, even if it drops a little bit, it'll still stay higher than pre-COVID?
I definitely think that will be the case. Even before this, we kind of saw that online space growing at a much slower rate, but we still saw the growth there and people slowly shifting to that space. I think COVID has jump-started a lot of people into that online purchasing, and so I would say a number of them will continue to buy online.
Cool.
So we do measure that e-com space that's listed on this slide through our Rakuten partnership, but we also have partnerships with both wine.com and Amazon. And so those are a couple of other e-retailers that we can look into. So if we take the top 12 brands that we see in those Nielsen off-premise channels and compare those to the top brands within wine.com, Amazon, and that Rakuten e-commerce space, we see very stark differences. So only one top brand from like our off-premise top 12 is actually selling in the top 12 on wine.com. So each of these retailers is definitely different because we see a little bit higher within Amazon and then our e-com space. So they're not the same retailers. So similarly to how businesses and companies have different strategies for a food retailer and a mass retailer, I think an online strategy is really important, but we do need to keep in mind that each online retailer is very unique, so having individualized strategies for each one of those retailers is definitely important when being in that space.
Sounds like there's a lot of opportunity in the e-commerce space for brands, and if they're not in the game already, they should at least be putting together a plan for it.
Definitely.
We also think that e-com is one of those spaces, like when we talked about how, there's still an opportunity for new products. Mm-hmm. And that's because it's a safe space, like Kaylee talked about before, you can browse online in a safe environment, and that's where you might have more of an opportunity to gain a consumer's, attention, especially if it's a new product, because we think consumers are probably more likely to experiment in that online environment.
And they have more time. I mean, they're spending more time online. They're visiting brands' websites and they're actually reading through them. So all of that kind of lends itself to, Kaylee, like you mentioned, if you adopt your strategy for these particular channels, you can, you can do well.
Yep. So another route, so we looked at our traditional e-commerce space and then the wine.com and Amazon, but we also have the ability to look at that direct-to-consumer space. So we partner on this one with Sovos Ship Compliant, and we do have reports available that we got this data specifically from. And when we look at it historically, we were seeing slowing growth year over year in the DTC space. Since the start of COVID, we've also seen some of that shift and uptick in sales with the direct-to-consumer data. So that's likely because people are no longer going to the tasting rooms for those wines that they want, so they're turning to purchasing those directly from the wineries. We also see a little bit of a variance between the value side of things and then the volume, likely driven by a drop in price. That was pretty surprising for us to see, since traditionally DTC sells at a higher price than what you would purchase from in the off-premise or in the e-commerce space. So that was pretty surprising for us. So as, Danelle spoke to the UPC counts dropping and the shelf space becoming a little more limited in store, and buyers are gravitating towards those online and e-retailers. It's important for like some of the smaller suppliers to really understand what they're selling through their e-commerce space and what's going on with the DTC space too.
Cool. What about subscriptions? Has there been a spike in subscriptions? Or? like a wine club where you get a couple of bottles a month, you know, like you put in like what you like, and then they'll send you like 3 bottles a month.
Yeah, go ahead.
Oh, no, I was going to defer to you for this one, Janelle.
Yeah, that isn't something that we've tracked separately, but it is a part of this, and so that's represented here. So we do see an increase in that, but it isn't something necessarily that we've tracked separately. One of the challenges I think for wine suppliers is a lot of times the wine club, they can initially get, you know, a consumer as a part of the wine club after they visit the winery, which of course that's dropped a lot. So I think it just goes back to suppliers, you know, really leaning on creative and unique ways to keep in touch with consumers and engage even new drinkers into their brand.
Yeah, it's kind of hard to do a sampling thing online unless you're really creating, you know, smaller sizes as a sample.
Which some suppliers are doing.
Oh, I mean, that's smart, because nowadays that's, you know, you're not going to take a chance on a big bottle, but you may get a few samples. But for the suppliers, it doesn't make sense any other way but using a smaller sample, smaller packaging for it.
Yep. Okay. Thanks, Kaylee, for the overview on e-com. I'll close with just a couple of thoughts here. First is around the economic fallout. So there, you know, especially within this industry, there were just drastic impacts on particularly on-premise closures. Unfortunately, we may not yet have seen the true economic fallout kind of at a broader scale across the country. And so, you know, more changes to come and probably more shifts to come. With that, we do expect there to continue to be a homebody economy and a homebody mentality. And so with that, we see a lot of opportunity within the off-premise space, but within e-commerce also, and then even e-commerce within the on-premise space that we talked about. For right now, consumers are trading up. Their premiumization continues. In fact, premiumization across the categories is, you know, even accelerated during COVID time periods. That's for right now. As we continue through this, and if we do start to see more of that economic fallout, then we potentially will see more of a shift from the more premium segments to the lower price tiers. We would suggest that, you know, just to be prepared to quickly pivot in terms of pricing and promotion and to adjust. You know, we talked earlier about the importance of flexibility and being creative, and that's across all aspects, including pricing and promotion. More than ever, maximizing digital communication and anything you can through e-commerce is again more important now than ever. And then really understanding the consumers and sizing the importance of consumers. So kind of understanding the differences between that constrained consumer versus the insulated consumer, understanding the shopping behaviors and perceptions of younger legal drinking age consumers versus older drinkers. And even in spaces like rural versus urban, and you know, we're seeing a shift of people moving from urban areas to more rural areas, and I'm just kind of understanding that the landscape of your consumer set, and really leveraging this increased popularity around local. So local has been popular for years, right? It's even more popular now, and it's more popular for a couple of reasons. And Joe, when you talked to Scott McKenzie, you might have talked about that a little bit of what we're seeing even at a global level, and local becoming more popular, more, you know, when we talk about local within the alcohol industry, sometimes we're talking about like local craft distilleries or local craft breweries, but in this case, it's just the idea of understanding and knowing where a product came from, and a greater sense of confidence and safety and security, and that product is passing through a fewer number of hands. And if I can go and pick up you know, a 12-pack of craft beer at my favorite local craft brewery, and they have curbside pickup, then that's great for me, because I know that I'm supporting a local establishment. Hopefully that's great for them, and then there's just more of a connection, and I know where that product is coming from. And so that pretty much that sums up our closing thoughts, but we've really appreciated having this conversation. So thanks so much for once again inviting Nielsen to be a part of it.
Of course. Well, thank you for the awesome information. And for anybody who would like to follow up with either Danelle or Kaylee, we have their contact information right here. I'll also include it in the post. And hopefully next year we'll be able to do this all in person.
Yes, hopefully.
Excellent. So Danelle, Kaylee, thank you so much for joining us, and thank you everybody for watching.